Geetha, what jumped out at you in this report?
So, Romain, the number one, metric that I looked for was the streaming loss number, and that actually came in much better than expected. So we were expecting about $850 million. It came in at about $659 million. So obviously they are taking profitability very, very seriously, and we're going to look for additional color, whether they're going to get to that break-even number sooner. We just saw actually Warner Brothers Discovery kind of talk about getting to DTC profitability 1 year ahead of schedule. So I think the street will be very interested to see what Disney has to say. But as you pointed out, I mean, the subscriber loss is a little bit concerning, and we need to get some more color on this. So we do know that they implemented a 40% price hike on their Disney Plus service towards the end of last year. So it's going to be interesting to see whether it was, the churn that kind of caused that subscriber loss. And also, we need to get some additional details on how well their advertising tier is doing. So they introduced that advertising tier along with that price hike.
Right. I believe the advertising tier is priced at what the normal offering was priced at before. So if you're just content to pay the price, now you're getting advertising. So one thing that Bob Iger made clear when he returned to Disney was that his number one priority, Geetha, was to fix streaming. What does that actually look like beyond cutting costs?
The number one thing, of course, Scarlett, is cutting costs, and they have a $5.5 billion cost-cutting program in place. Majority of the costs, of course, in the streaming business, apart from content costs, is really going to be on marketing, on promotion, on technology, and they're really looking to right-size that. So they're going to be very, very prudent when it comes to not only spending on content, when it comes to launching in new markets, when it comes to kind of marketing, promotions, you name it. And so definitely on the content cost side and general costs, we're definitely seeing them kind of right-size that. The other thing, of course, is how much pricing power they have. And one thing that was pretty evident in this report was we definitely have seen that bump up in ARPU. So for the longest time, we've kind of seen that Disney Plus ARPU in the U.S. hover around the $6 mark. Now, with those price increases in effect, it's above $7. It's a 20% year-over-year increase. And so now the question then becomes for Bob Iger is, where is the ultimate pricing power for the Disney Plus product? We know that Netflix prices at $16, right? Yeah. That's their ARPU in the U.S. So how much more of upside do they have? I think that is the ultimate question.
I want to get your thoughts, Geetha, though, on the broadcast, the live TV business, however they're categorizing it right now. We expected that drawdown, and it was pretty substantial here, a 35% drop or so in the income in that division here. Where does that hold up, not only in terms of ad revenue, but also just in terms of eyeballs?
Yeah, so obviously, cord cutting is elevated, but this 35% drop was actually telegraphed, and majority of it is not so much because of cord cutting, but it was really because of a big step up in sports fees. So one was the new NFL contract, then there was a new college football contract. So that was kind of more kind of, I would say, a timing issue. Okay. I think we're kind of going to see those losses. The linear TV business is still in decline. There's no two ways about that. But I think we're going to see those losses kind of moderate as we get through the year. But you're absolutely right. I mean, the TV business is in a very, very tough place. And I think you brought up a really interesting point about, the future of ESPN, because a lot of that is tied into with that.
And you think Iger is going to keep ESPN in the fold as part of the company, as a unit?
That's what he's been saying. I mean, remember, ESPN still brings in about $4 billion in EBITDA every year. So it is a critical part of the business. The question is, when they make that push into streaming, how is it going to be incremental rather than cannibalistic?
And Geetha, very quickly here on Hulu, we still are waiting for some kind of decision on whether they're going to sell off their stake or perhaps buy Comcast stake. What is the value out of Hulu right now to Disney?
So Hulu is really important to them, I think, from on two aspects. So one is, of course, it's part of the bigger Disney bundle. So it's really important both for customer acquisition as well as for customer retention. But more important than that is really the infrastructure that Hulu brings to Disney with its advertising product. Because remember, Hulu is one of the most successful ad-based streaming options out there. It generates over $3 billion in advertising. And a big reason why Disney Plus was jumping into this advertising tier was because they knew they had a lot of plumbing in place, a lot of the infrastructure with the Hulu product.